There is a really weird thing happening with Meta right now. On one hand, it's an advertising juggernaut that seems completely unstoppable. But on the other, investors are getting seriously antsy about its future. To figure out what's going on, we're going to dive into a great analyst report from Morningstar that really unpacks this whole puzzle. So let's get right to it. How can a company be crushing it this hard and at the same time have Wall Street so on edge? Well, it all comes down to this epic battle between absolutely insane profits and even more insane eye-watering costs. All right, let's start with the good news, and trust me, it's really good. Meta's third quarter sales shot up by a whopping 26%. Now, this isn't just some fluke. It's proof that their core ad business is absolutely firing on all cylinders, mostly thanks to some big AI upgrades that are getting people to engage more. But, and this is a huge but, here's the catch. They're planning to spend over $100 billion next year, and almost all of it is going into that same AI. A number that big? Yeah, that's what's giving everyone a serious case of the jitters. Okay, so to really wrap our heads around this, we first have to appreciate just how much of a fortress Meta's main business is. Seriously, for years, competitors have been trying to find a crack in the walls, and they just can't. The secret sauce here is something analysts call an economic moat. Just picture a castle, right? The moat is that big ditch of water keeping all the invaders out. The wider the moat, the safer the castle and its treasure. Well, according to this Morningstar report, Meta's moat isn't just wide, it's practically an ocean. So what's filling this giant moat? The analyst says it comes down to two main things. First, you've got the network effect. I mean, you're on Instagram because your friends are, and they're on it because you are, right? It just feeds on itself. And second, data. Just mountains and mountains of user data, which is like rocket fuel for their ad engine. And the scale we're talking about here is just mind-bending. Almost 4 billion people use one of Meta's apps every single month. Let that sink in. That's about 3 out of every 4 people on the entire internet. A user base that big isn't just a feature, it's a weapon. Oh, and they are not shy about using it. The analyst points to this simple but kind of ruthless playbook Meta has. Whenever a competitor gets a hit idea, Meta just says, hey, that's nice, copies it, and pushes it out to its billions of users. Think about it. Stories, reels, threads, you've seen this movie before, and it works every time. Okay, but here's the twist in the story. The very same AI that's supercharging their ad business, well, it's also the source of that terrifying avalanche of costs we talked about. And that is what has investors spooked. This quote right here really nails why everyone's so nervous. Investors basically have PTSD from the whole metaverse bet. They watched Meta pour billions and billions into reality labs with, let's be honest, not a whole lot to show for it. So now they see this new giant AI bill and they're thinking, uh-oh, is this just another money pit? But the analyst makes a really good point. Not all AI spending is created equal. Using AI to make your ads smarter and to make reels so addictive you can't put your phone down? That's a no-brainer. That clearly adds value. But spending billions to build your own AI chatbot, Llama, with no clear way to make money off of it, that's where people get nervous. Especially when you could probably just license similar tech from someone else for way cheaper. So this all sets up a classic Wall Street showdown. On one side, you've got the bulls, the optimists, who see a massive opportunity here. And on the other side, you've got the bears, the pessimists, who are looking at this and seeing a huge, unacceptable risk. So here's how the two sides break down. The bulls are all in on AI juicing the core ad business. Plus, they say that Meta's scale and data are just unbeatable. The bears, though, are pointing to the billions being burned on these new ventures, the looming threat of government lawsuits, and a worrying dependence on ad money from just a few big Chinese companies like Temu and Shein. Okay, so you've got the impenetrable fortress on one side and a terrifying mountain of spending on the other. After weighing all of that, what's the final call? Where does the Morningstar analyst actually land on this whole thing? And the verdict is the stock is undervalued. The analyst actually put an $850 fair value target on the stock, which was way higher than where it was trading. So basically, despite all the risks, the report is saying the market is just being way too pessimistic. So why the optimism? Because the analyst sees this insane spending on AI not as a luxury, but as an absolute necessity. The argument goes like this. For a company as huge as Meta, trying to license this kind of tech from a rival would be so ridiculously expensive, it would totally destroy their profits. Building it themselves is really the only way they can control their own destiny and stay on top. And this really brings us to a much bigger question, doesn't it? Is this just a meta story, or is this the new reality for all the tech giants? In this high-stakes race for the future, are $100 billion bets no longer a choice, but simply the new cost of survival?